last two bars, it reverses, and look at this. The volume gets bigger, the spread gets bigger, so the smart money are back in the game again, okay? Up, up, up. This is where you pay attention one more time. Again, it's not going to stop you out if you were down here at this level, okay? But pay attention because you might end up getting caught up here as it goes along. But look at the profit to make even from this climactic action bar to this one. It's pretty beautiful. So now I'm going to split the screen and show you both. All right. Again, on the left over here is our futures contract, and on the right is our Forex. People always say to me, to Gavin, to Darren, how does volume even play a role in the Forex market? How would I even use VSA in the Forex market? Well, you can see right here. It tells the exact same story no matter which market you're using. Okay, same spot, same spot. Here's your climactic action. Here you go, right? From one to the next. Okay, Richard Seegers would call it his beefy man. Yep, Joe, we'll look at the ES and the GC at the end, okay? And Steve's right, it is pretty identical. And that's the whole point, is that it's the same contract, but it's same instrument being traded in more than one market, but it reacts exactly the same way. The smart money is essentially doing the exact same thing in both markets. They're on to something. So Fiona asks, as beginners, should you be in the futures market? I mean, my opinion is you could be in any market. I actually find it really fun to be in the futures market because you don't need to own in order to short. Where a stock, you need to own it before you can short it. So you can basically get in on anything that you're interested in with the futures market. It kind of gives you a little bit more range. Just my personal opinion, I've enjoyed learning about it. I also love the Forex market too. I think it's really cool that it just keeps going back and forth. You're essentially buying one and selling the other. So they both appeal to me. All right, now here's your turn, guys. You ready? So here's a naked chart, okay? And you want to find out basically where is your climactic action bar? Where's your high bar? Okay, so I know you can't draw on the screen, but you can basically take a peek, guess on the date, and yep, Gordon and Scott and Steve and Jeff, you is right, Carlos, Mark, yeah, you guys are all getting it. Okay, so look. There's your first one, right? It's pretty obvious. It's a big skyscraper. Now you notice the widespread bar. It's a widespread down bar. It closes on the low. If you look to the left, it's a fresh new low ground, and the next bar closes up. And you notice that the volume is still pretty high, okay? That means the smart money is still in. Now look at that bar. That's an up bar, right? Yes or no? Y for yes, N for no. Okay, good. Yes, an up bar is a bar that closes higher than the one behind it. Now tell me, guys, what do you notice about the volume? As the price goes up, the volume goes low, lower, down, much lower, down, down, down. Good. Everyone's got it, right? So there you go. It's going down, okay? So this is not a good point to enter the trade. In your background, you're in an overall downtrend, and the first time that you see a reversal is that first climactic action bar that you saw. Again, you're in an overall downtrend on the left. The first time you see a skyscraper or climactic action bar is there, and now you've reversed it. It hasn't quite reversed it, but it's starting to, okay? Again, there's your climactic action bar. It's starting to change the trend. We just need to wait a little bit more for confirmation. You notice 3 bars later, right here, you have another skyscraper bar. The volume is very high, ultra high, extremely high, okay? And again, the bar closes higher. But look, it closes back in the body of this climactic action bar, right? It goes sideways, but notice what happens to the volume. What does the volume do? It goes down, right? It goes down, 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 and finally, the next time you see healthy volume, It's now gone lower than this one. It stayed, it goes up, it stays, and then it goes up. So it's tested here, it goes up, it fails its test on almost nothing. It drifts one more time and then gaps up, okay? So there's your skyscraper bar, your next one, right? And if you put your stop in right below that last wide spread, that last ultra high volume, okay, you would be able to catch, this would catch you in these last, see how they went just below it and they come right back up here? This is when it went down and it came back through the body of this bar. You put your stop here and it goes up and it never comes back down to that volume. After it's tested it right here, notice none of the volume even becomes relevant. None of it even comes close to this. Is the same principle used for Forex too? Absolutely. It's for all markets. Fred asks a good question. Why does it fail the test? It basically, it starts here with the climactic action. It gaps down. The volume's still high, so the professional money's in it. It tries one more time to go up, but the volume doesn't support it. So it knocks it back into this area. It goes up a little bit, but never as high as that. And it's not until you get this, again, it's basically this huge effort from the smart money to try and push it back up. It pushes it back up, but it still closes right around where it did before. So that means it's got a little bit more time to go. It's not quite ready. There might still be some buyers that they're trying to shake out. Because remember, these bars aren't 100% smart money. You don't know exactly how much selling or how much buying it is. And so you need to wait, okay? This is why you use the climactic action bar as an alert and you use it to place your stops, but you don't trade on it, okay? So basically what you're doing is you're waiting, and then once it goes down, it finally goes back into this bar right here, guys, is where it finally goes back into the body of this bar, okay? You can go in on this if you want to. You can wait one more time for it to go down. I would basically have waited until it went back down. Either here is where I would have entered or here.
And I'd be entering right up there when the price action has gone above the bar.
And Gavin would have waited until right around here, where the price action finally met back into the body of this bar. Into this bar, I'm sorry, this bar right here. Okay, so if we trace this right across, he would have entered somewhere around here. Okay?
A few questions coming in there.
Yep. Danilo says sometimes we need to look at the pivot or resistance area is where the smart money, they do the shakeout or climactic action. Absolutely. Again, you can see right here, this large volume is where they were. Watch it go down one more time. The volume isn't as high.
You might want to tell them it's BP stock.
Okay. Now this is a BP stock, and this is on the 8-year low. Okay. So this was a previous support level that had actually reached in 2003. That's the beauty of stocks. Well, I suppose most instruments go back to the price from whence it came. According to Richard Seegers, approximately 80% of the time, price returns from whence it came. Okay? All right. Here's a special I want to offer you guys, and then after that, if there's any charts you want to see, I'll be happy, Gavin and I will be happy to go over any of them. Special offer is the end of day software. You can own it outright. Typically what you see with end of day is you have a $9.95 price and you have to pay for it each additional year. This is owning it outright. This is the VSA trading course that goes along with the software. This will give you the VSA Club membership for 1 year, which gives you 4 live webinars a week and gives you the ability, if you can attend them live or if you want to see them again, it gives you the ability to actually view archived webinars dating back as early as 2009. Because again, we have 16 principles, and just because it's not brand new or last week doesn't mean that you can't learn from the same setup over and over again, because the same principles appear over and over again. You also get the chart reading masterclass, and you get 2 months of free data feed through Reuters. And then you also get Gavin's ebook, Trading in the Shadow of the Smart Money. Okay?
link in the room.
So we just put the link in the room, and that's where you can order. Okay, and, oops. Why is my PowerPoint not working? Come on. Ah, there we go. Thank you. And here's your price, $4.95. The chart reading masterclass alone is $4.95. The end of day software is $9.95. So you're essentially saving $1,500. Gavin's ebook is actually $99 as well. So, Gordon, just send me an email and we can figure it out offline, okay? So here's the offer. Again, there's the link. And you can contact me here by email, by phone, or by Skype. Okay. Joe asks, sometimes ultra-high volume occurs clearly in the 4 or hourly bars, but not so clear in the daily bars. How would you weight these signs? So you start with the larger time frames, and then you go back down and you try to see your confirmation as well. So if you're seeing in a larger time frame that you have an overall uptrend or an overall downtrend, but the smaller time frames are starting to get noisier and they're sort of whipsawing, then you need to wait to enter. I hope that helps answer your question. Terry, the VSA Club is what I was just explaining. It's 4 live webinars a week. It's done by Tom Williams, it's done by Gavin, and it's done by Philip Friston, and they take all of the markets and they also dissect them. Tom also does a weekly newsletter, and so you have access both to the live webinars and to the archives, again going back to 2009. So it's actually a really good learning opportunity. Also, what I've noticed that a lot of people benefit from is that you're in there and it's a chance to ask a lot of questions. So sometimes people will ask questions that you were also thinking. So you tend to learn with the other people around you, and it's also a way to support the community to keep you kind of, you know, looking at what's hot in different charts that you may have missed. Bill asks, yep, we're going to look at the E-mini chart today. And yep, so we're gonna see that in just a minute. All right, and Steph, you wanted to look at the euro. Sure. So the live webinars, Bill, are throughout the week. If you just go on the VSA Club under webinars, you can actually just register morning and afternoons. Okay, so let's go to, I'm going to get out of this PowerPoint. Again, this will be uploaded and available for review probably as early as tomorrow morning. But we're going to get out of this PowerPoint for now, and we're going to take a look at some charts for you, okay? And Gavin, I'm going to give you the microphone because you're more comfortable going through your own computer. Okay, so just give us 1 second, guys.
Okay, hi everybody, welcome again. And right, let's look at a trade on the E-mini today, because we've had some very interesting movement there. Well done, Lauren. Another great job. Round of applause, please. I think she's doing better and better each week. And yeah, there you go. Clap, clap, clap. There we go. So you're getting some rounds of applause. So it's never easy doing webinars. You know, I remember doing my one for the first time, and you've got a lot of people here, hundreds of you, and she's done very well. So well done, Lauren. I think she's done a good job there. So there we are. You can pat yourself on the back. Alrighty, we're going to take a look here. Very interesting what happened on the ES today. 1200 is a very significant level, and we've actually had today, you'll see I was trading this today, and we've actually had some very, very good entries here and here. And on the 1 minute and 2 minute charts today, you had even better entries. It was beautiful. Now what's happening is this bar here and this area here is climactic. Now that's going to get tested tomorrow. Very, very likely, and I would expect the market probably to drift back down a few more points to test this volume. It's very high volume, as we can see. So there's buyers and sellers at that in this last few moments. We see the smart money showing themselves very clearly. Cornell says, Gavin, your job is in danger. Hey, listen, if I can go and retire and sit on a beach and let Lauren do all the work, I'm happy. It'll work for me. No worries. Okay, so you see the trend channel that I had in place today. This is the 5 minute chart of the E-mini. Okay, I'm just going to show you what actually happened. There's two bars of major significance today. Okay, and this is how volume works. That bar and that bar there together, followed by that bar, okay, are part of a sequence that I write about in my book, my second book. Now, someone said they can't see the chart, so I'm going to actually, for you, Sunika, I've actually put the chart back up, so you should be able to see it. This is what's caused the big rally today that we've seen. And interestingly enough, we've broken out of a very significant trading range. Okay, Sunika, you may have to log back in. There is still room, so try logging back in if you can't see, because everybody else can definitely see it. It's definitely working. So let's examine this bar here. Okay, now based on what Lauren has just taught you, what do we notice about the volume on that bar? Okay, what can you see? Just observe it. Look at that volume at the get-go, right as the market, and this always happens. We always see very high volume, but we've got to look at the following bars tell us if we're in for a bull market or a bear market during the day. And these, you'll see there's no red indicators here on this chart. They're all green going up here. And the reason for that is there's a lot of strength on this bar here. You've got stopping volume preceded by climactic action. Now that's one of my favorite indicators. You don't see it very, very often, maybe once every 2 weeks. It's going to mean that the market is strong for the day. If you read Tom's newsletter, which you get as part of the VSA Club membership, every Friday he does a newsletter. And in that newsletter last week, he was very confident that the market was actually fairly strong. No, Bill, it doesn't matter just it's because it's the market open. The markets are always moved by the smart money at the open. That's why you see the high volume. They become very active all at the same time because they're positioning themselves for the day. Okay? They're actually positioning themselves for the day. So here we see a down bar on very high volume, but the next bar is the one that I think is the most important. And I want to go back to it, and I want you to see what your observations are on it. That was my trade there today, and let me show you what happened. There were several good entries here. Now, why is that bar